Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Dr. Russell Rhoads, Associate Clinical Professor of Finance at Indiana University, to discuss trends in short-term trading with NDX options. Russell, you just published a paper on short-term trading with NDX options. What was the catalyst behind this work?
Well, I think the main catalyst was everybody really cares about short-dated and daily index options right now. We've seen a huge spike in option trading volume, and a lot of that can be attributed to the options expiring in just a day or two. And my assumption is if the volume continues to increase, that traders have found one way or another to consistently make money using these options.
So what did your analysis show?
Well, what we first started out with was we wanted to see if the options were consistently overpriced or underpriced. There's an assumption that options over a long-term basis, not every day, but on a long-term basis, will be overpriced relative to the subsequent move. So what we did was we started out looking at the one-day at-the-money straddles for every PM expiration for NDX in 2022. And we looked at selling an at-the-money straddle and then holding it through expiration. They're cash settled, so holding it through expiration is what a lot of people would do. And after seeing the results from the one-day straddles, which were nothing short of horrendous if you had consistently sold a straddle in 2022, we decided to expand that to 2, 3, 4, and 5-day tenors as well. And it turns out none of them were profitable. And in fact, the 2-day straddles put up by far the worst results, again, if you're selling those straddles.
Were there any positive trends in the data?
We did find some. Well, first off, if you had purchased those straddles, that would have worked out. But we generally don't like to encourage people to buy options on a consistent basis with time decay, et cetera. That tends to work against you. But what we did see was as we worked toward the end of 2022, there were still losses for the 1, 2, and 3-day timeframes. However, the 4 and 5 days actually would have made a little bit of money in the fourth quarter of 2022, and the losses were much less for the 1, 2, and 3 days as well. We take that as the market makers that tend to react to the flow that's coming in and raise and lower their implied volatility inputs, that maybe they didn't have a really good handle as dailies became more and more popular, or the daily expirations became more and more popular. But as time has gone by, maybe they're getting a better handle on them and they're a little bit more fairly priced than they used to be.
So then what's the significance of this, Russell? Is this actually helping market makers with their strategies?
I think it's something that market makers are well, I know it is something that market makers are aware of. I shouldn't even say think, because I have had a couple of conversations at some of the events I've been at in the past couple of months where the market makers are actually segmenting out a book where they look at the options that expire within the next 5 days. And then they've got another book that is trading, I guess we'll say, the traditional option expirations that they're used to. And they can still manage that traditional book. But I feel like they've been trying to get a handle on exactly how to manage the risk for short dated options for 1 and 2 and 3 day trades. And the trend looks like they're doing a better job with that. I've just started compiling the data for the first 2 months of 2023, and we'll see if that trend that was in place in the fourth quarter is holding up, and if maybe they're doing a better job of pricing these options, which might mean the long opportunities are starting to go away.
Are short-term options a good thing for the market then, or is it there's too much risk in it? What do you think?
I personally think that anything that adds liquidity to the overall ecosystem, and the short-dated options, it's not like we see we don't see volume coming away from longer-dated options. It's newer trading that's coming into the NDX ecosystem. So any extra trading within that ecosystem, any more participants, increases the liquidity, and I think it's good for everybody involved.
All right, appreciate the insights. Russell, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.